Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today, this video is going to be a little bit different than what I've done historically. Today, we're going to be looking at how to perform simple market analysis. And when I say simple, it's going to be more of taking a glance at the chart, so the daily, weekly, or monthly, and having technical indicators to assist you with making a decision, and also looking at the financial data points, which will help you make a decision on the fundamental end uh, for the analysis. Typically, when I review a company or a stock, I like to have a story. So I like to have the chart going one way, whether it's coming down in a dip and with a possibility to U-turn, or it's overextended and has gone on for way too long. The gains have been enormous and it needs to come back down to reality. So we'll review a couple examples to show you how to perform just a quick analysis if something's going to be worth it or not. If you've seen my videos, there's Redfin, Rivian, Lululemon, GoEV. A lot of those, I will simply just stop talking about a company, typically like Redfin or GoEV. If a company is not profitable and they are losing more money than they are making, institutions and hedge funds are selling and not buying, um, and just there's not much of a story there. I will just drop the stock and move on with my life, because if I'm going to be looking at a potential deal or a stock, you want it to make sense. And typically, if something doesn't make sense, you're just going to take the emotion out of it. Don't think about, oh, this could change my life. This could do this or that, or I could just buy this for, small amounts for the future because my friend or somebody in the industry knows this sector is going to be so hot. Take emotion out of it. If it doesn't make sense, just move along. I always get comments of people saying, you don't know what you're talking about. You don't even research. Well, duh. Why would I continue to research a company if it doesn't make sense to own in the first place? If you're trying to present a business idea to someone and it doesn't make sense, they're just going to stop you in the tracks. You're wasting their time. You're not going to get anywhere. So you need to have a compelling case for a stock, and I'm going to show you how we can find that together and how you can find that on your own as well going forward. So without further ado, I'm going to stop talking. Let's go ahead and jump into the charts. All right, you guys. So when I say we need a narrative, typically, this is exactly what I mean. Ticker symbol GOEV. Watch this video. I released it almost a month ago. This chart looks beautiful, doesn't it? You can see the strength is going up. Nice bottom put in, nice rise up, beautiful candles right here. But there's two sides to a story always. So you have this pick, the technical side, which looks great. This looks very nice, doesn't it? However, take a look at the fundamentals down here. Sorry for that. Look at this. They make 890,000. They're losing 320 million. That's obviously not a recipe for success. I called it out as it was. People got upset. It is what it is. At this point, this video took me it took me 6 minutes. Normally my videos, if I review a stock and it's good, it's about 15-20 minutes. But I mean, this is easy. Look at this. Although this part looked great, it did look great. This is where you get turned off quick. They lose a ton more money than they make. Look at the dilution over the years. You can see 37 million shares last year. Now we're at 64. It's just an ugly case on top of an ugly case. And then you have the CEO who spent more money on their private jet than they made selling cars. And someone got upset with me because I didn't know who the CEO was. But you know what? It really didn't matter, because it sounds like the dude's really smart to get the company to pay for his private jet and to give him a salary. So, yes, there's always multiple things to check out. So what we're going to do, I'm just going to look for a typical stock so we can start with a fresh base. And we'll go down to see what institutions are doing. So someone bought $4.5 million worth of ticker symbol CWEN. This is Clearway Energy Renewables. You can see, I mean, this chart, it looks decent. So I'm going to cover two parts for this simple market analysis. One is going to be the technical side. So it'll be the chart that we're looking at right here. Then it'll be these data points here. And depending on your risk tolerance, I am someone who looks at the bigger picture, but we'll look at the frames together. So for a daily chart, back in October, this was at 18. Then it went up about 50% to 27. Then it came back down to $20, and now it's trading at 23. Looking at the weekly chart, let's see what we see. Oh, this thing went from 42 to 18 to 27. So it's kind of had a huge downtrend, a little rise up here. You notice like the lows are getting higher. So our low was here before, now it's here. So the lows were as low as 18, now the lows here are up to 20. So just observations, looking at the strength, you can see the MACD is turning up, money flow has a little hook on it. Relative momentum looks like it's going upwards. That's for the weekly. And then this is my favorite. This is the monthly. So if you bought this stock back in 2015, June 2015, you would have basically been at the same point that you are today. If you would have bought this at $10 back in 2016 and you held it, you would have got to $40 and now you're back to 23. So you're up about 100%-ish. And I do like the longer time frames because the bigger the moves on the monthly, the longer the expansion on the chart. So what I mean by that is you can see this downtrend here is still hasn't really given us enough to persuade me to get into this yet. Strength is at a 43 right here, not too bad. Money flow looks like it dipped super low, came up a little, and now it's kind of scraping the bottom again. Relative momentum just scraping the bottom. This company does offer a nice dividend. This is beautiful. Their sales right here are beautiful, just going up and to the right essentially. Looks like 2023 they kind of plateaued. EPS, although it's not consistently up and to the right, it is positive. And then shares outstanding really haven't changed over the last 4 years, 5 years. Back in 2019, there was 113 million shares, 2023, 117 million. So overall, this seems like something I would be interested in because they are profitable. You can see here. They do offer a dividend, and I typically don't like dividend. I like more high growth companies. You can see the price earnings here. You typically want that closer to a 15. This is at a 35. The forward PE, you want it to be less than the PE because if a company is going to continue on the trajectory that they're at, their business, the stock is only going to gain value in the future. So you want the forward price earnings to be lower, which this is lower and it's closer to 15. And you can see that's probably why, because, I don't know, it doesn't make sense. You could see that EPS here is 27% this year. EPS next year is 19%. So they have guided downward, and that could have been strategical so they could hit their targets. Just a lot of things to think about. You can see institutions own 67%, and you can check that. So CWEN. So if institutions and hedge funds are buying and you have a 5, 10, 15, 20 year time horizon to invest, maybe this company or other companies make sense. So old data shows that institutions own 67%. And I call this old data because FinViz does not update as frequently as FinTel. So old data, 67%, new data, 78%. That's over 10%. And you can see right here, looks like this is going in the right direction. Vanguard, BlackRock, of course they own this. They both, Vanguard increased, BlackRock decreased. And we can see April 5th, just a few days ago, we have some people adding to their position. So Again, this simple market analysis is what I call simple, just looking at the chart, looking at the financial data points here, and we can go down and see who's been buying and selling. It looks like Global Infrastructure Investor bought 4.5 million, and then Total Energies SE purchased 4.5 million as well. I don't know if these are the same company or not. They purchased on the same day. They have the same shares total. So again, just things like that. Going to the balance sheet, you want a company to have more assets than liabilities. So for example, this company, you want to see USD down here. USD, we got it. They have 14.7 billion in assets, 9.7 billion in liabilities. I like to see at least a 2 to 10x, where assets dwarf liabilities 2 to 10x. But for companies that pay dividends, that's kind of rare. This company is paying a 6% dividend. That is kind of nuts. That is kind of nuts. Um, and so if I had to choose a day or time to get in this, I would be going to the chart and I would be doing something like this. So I would want to wait to have the stock come and touch down here. Let's see. We could go like that. So basically, whenever the stock comes and touches down here, moving up towards this. So here's our support, this black line down here. Our black line appears our resistance. You can see it's tapped support 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 times before it went and ran 50%. So right now it's only tapped once. So I think we'll see some more opportunity for this to tap, and maybe on top of that, the stock might actually go lower. And we have also right here our apex, and the apex is always where support and resistance meet. So we could see this thing just dilly-dally up and down here, dilly-dally, and then it's going to have to make a pivot move to the upside or to the downside. So that's my high-level market analysis. If you master this, you will figure out to drop companies right away. So this is the average experience if you're just reviewing a stock. One that's really risky, and this is going to make a lot of sense, is the biotech industry. And I'm going to show you exactly why. A lot of these biotech stocks have really high prices, but no sales. All of their intellectual property, experiments, trials, they're all the stock price is just based around if those trials, experiments are going to go positive. So we're going to look at some of the most expensive biotech stocks here. And I'm going to show you just randomly cherry picking ones that don't make any sense. So we'll just go to page 4. And we're going to look at GMAB. We'll look at AGIO, and we'll go to page 7. I'm just trying to be extremely random here. And we'll look at RCUS. Okay. So the first one is going to be ticker symbol GMAB. It's a $30 stock. Do they have revenue? They actually do. This one actually looks really good. They do sales of 2.3 billion and income of 633 million. This is actually a really good company. And you can see the forward PE. This is actually a decent buy. Institutions are loading this one up. And again, like, this is a beautiful one. This is rare, in my opinion. All right. So that one, GMAB, that was a good one. And if we look at let's just look at the monthly chart for GMAB really quick. Yeah, this one has gone pretty high and far. This used to be $1 and it went as high as around 48. So right now it's at 29. Not bad. Now we're looking at ticker symbol AGIO. It is still loading. This is exactly what I'm talking about with the biotech stock. So if you're doing a high level market analysis, you're going to come down here to sales and then you're going to see income. They're losing 352 million, but they make 26 million. Automatic right there. That's a full stop. You got to stop where you're at and you got to just say goodbye. Don't get emotions into it. If you know a friend or family member who's in a biotech experiment and they're participating, you've just got to take emotion out of it. And that goes for like that Go EV stock. If you're into electric vehicles, you own an electric vehicle, just take the emotion out of it. Look at the data, and you're going to pass on this one just based off of that right there. And again, this is a $30 stock. Isn't that insane? It's been as high as 132. So again, just quick things that will get you to say goodbye. And then we're going to look at RCUS really quick. Yep, same situation. They lose 307 million, but they make 117 million. That's never gonna fly. But there are going to be some instances where they are not profitable. So this will be negative, and you will want to perform some type of analysis. So a good one is Bumble. That was one that I looked at recently. They are not profitable, but you need to use a little bit of some problem solving, critical thinking in this. And I'm going to show you why. So they make 1 billion doll hairs, but they lose 4 million. These types of situations are beautiful because 4 billion compared to 1 billion, 4 million compared to 1 billion, is that like that's not even 1%. That's 0.4% negative profitability. So when it makes sense, like this company, this looks like a great opportunity to dollar cost average lower. And we can see, look at these sales, look at this history. This proves to us that this company can execute. You can see earnings per share quarter over quarter, 76%, sales quarter over quarter, 13%, sales over the past 5 years, 21%, earnings per share year over year, trailing 12 months, 93%, EPS this year, 2,200, EPS next year, 48%. That's just madness. Like this level of unprofitability, I feel like the risk reward here is decent if you have a time horizon. And I say that only because the market can be more irrational than you can be solvent, meaning this thing can trend lower and lower and lower for months to years incrementally. So if you buy in today and then maybe in a year or two it's $5, you just have to understand where the value is. And with a company like this, just understanding, they're pretty much on the cusp of profitability. They make $1 billion. Their forward priced earnings is 11. And then just go, let's see what institutions and hedge funds are doing. Like just try and gather as much data to give you a clear direction of where you think the stock could go. So old data says institutions own 72%. New data says 108%. That's a 36% increase. That is absolutely bananas insane. And you can see Blackstone decreased slightly, Vanguard increased nicely, FMR decreased 50%, Wellington Management decreased about 2 million shares. BlackRock added a new position for 9 million shares. JP Morgan Chase sold off 10 million shares. Heard Whitney Wolf sold off about 1 million shares. So, I mean, ownership is 108%. Old data is 72%. Just take things into consideration. Insiders are probably cashing that bag out. Oh, yeah. So just again, thinking about out loud, thinking about things as a market analysis, I feel like this has a future, But with all the insider selling, we saw institutional selling, you might have a chance to get this lower. If you're someone who has time on your side and you have $1,000 to put towards Bumble, maybe put $20 every week. Just on Monday, 6 a.m., just buy $20. Just make it a non-emotional transaction. Just buy whatever it's at. Just every week. So by the end of the month, you'll have deployed maybe 80 to $100. Do that for 5 months. You're going to dollar cost average on the downside, meaning you're taking advantage of a decent stock at a discount. There's a phenomenon, you probably heard me say it. Nobody likes to buy stocks when they're on sale. They only like to buy clothes, shampoo, deodorant, products, services, but nobody likes to buy stocks when they're on sale. So one of the biggest regrets I always have is when I just wait too long to buy a stock and then it just goes up. And we've all had that feeling. One of them is going to be the Honest Company. If I'm being honest, the Honest Company did that. This thing was trending down and down. Same situation. The company they make 344 million, but they lose 39 million. Think about that in terms of relative size. That's like almost 10%. They're down 11% profitability. But look where their sales are going. They're up and to the right. EPS looks like it's curling right here. Insiders it looks like they're buying there. Check what hedge funds are doing. But again, this thing, if you would have bought in dollar cost average down the last year, you would have been buying at $1.80, $1.47, $1.60, $1.50, $1.20, $1. You've had a nice average at $1, and now it's at $3.18. Again, just high level market analysis. Do you think a company is going to go out of business tomorrow? Based on numbers like this, no. Based off of numbers like Bumble, no. Based off of companies like that one that we looked at, GMAB, no. Looking at those two biotech stocks that were majorly unprofitable and could just collapse at any day if a trial failed, yes, that looks high risk. GoEV, the one that we looked at, this one looks like it's going to go out of business any day now. Just based off, again, take emotion out of it. I'm not pooping on anybody. I'm sure Tony Achilles, an amazing CEO, but when you make 890,000 and you lose 302 million, and your CEO spends more money on their private jet than it did selling cars, there's some freaking questions that come up, and you're like, I'm probably gonna pass on this one. So again, that's how you can perform simple market analysis. I don't know if I went in a circle there. Let me know if you have a question about that, but just using your technical analysis, use the chart, use the financial data points, use hedge fund, institution, insider analysis, and use common sense. If a company's losing 302 million, but they only bring in 890,000, is that a good deal? Probably not. Another good one is Rivian. I'm releasing a video this week on Rivian. You should watch it. Tell me what you think of this. I've done my analysis. I want you in your head to think about Rivian. Look at this chart. The stock used to be $179. Now it's at $10.44. They make 4.4 billion, but they lose 5.4 billion. Insiders are selling slightly. Institutions, it looks like they're buying slightly. That's older data. We can check newer data, but I don't want to. EPS, look at the trajectory of the EPS. Look at the trajectory of the sales. 2021, they did $60,000. 2022, they did 1.6 billion. 2023, they did 4.4 billion. What do you think they're gonna do for 2025? 2019, they had 900 million shares outstanding. 2023, they had 968 million. It's 2024 now, and they have 960 million. So we can see there's some natural and organic accumulate or natural and organic purchasing and buying and stuff. So you do your homework on this one. I have a video on Rivian coming out this week, so maybe we can swap notes on that one. So take some time, look at Rivian, check the site that I went to right here, fintel.io/SO/US/ whatever ticker symbol you want to look at. That concludes this video. If you made it this far, consider subscribing. Thank you so much for watching. Let me know if you have any questions, comments, concerns. And yeah, thanks for being a watcher, a viewer. Take care.